Welcome, ladies and gentlemen. My name is Robert Roy, and I am the founder of Wealth Builders HQ. In this E-mini basic training video series, you will learn how to trade the E-mini futures. This video will focus on the E-mini contract specifications. So let's jump right in. We look at the specifications of the individual contracts. There are three primary contracts that I want to talk about. Now, in the very first video series, I mentioned or talked about, gave you some symbols for the YM, which is the Dow. I gave you the NASDAQ, the S&P 500, and I gave the Russell 2000. I just want to talk for now about the three primaries that you will hear over and over again, whether you're watching CNBC or Bloomberg. They don't talk Russell very much, although there is value in trading it. As a newer trader, I really want you to focus. And the less contracts I can get you looking at, the better off it is when you first start. So let's get you through the basics, and we'll hit some more of the advanced components as we get through the series a little bit. So the very first one, I mentioned the YM, or the Dow, was my favorite. We're going to start off with the Dow. So the very first thing is the ticker symbol is the YM. Now, folks, unlike a stock, if you were to go ahead and say, okay, what's the ticker symbol for Ford? Well, that's F, is Ford. Boeing, big airplane. Let's see, Applied Material, AMAT, right? Apple, AAPL. Those are standard symbols. If I went from one broker to the next, to the next, to the next, every single broker will have the same exact symbol. There will be no deviation. For futures, there is a slight difference. We actually need to build our contract or our symbol out. And I will teach you the structure of it in a future video. But for right now, just understand YM is called the root symbol, root, R-O-O-T. In case you cannot understand my Brooklynese, it is root. The root symbol is what we're looking at. Every broker will understand what that is. They may have a different way of building a symbol from one broker to the next, but the YM they will all understand. It says contract size is $5. So basically what that means is every point, or what is known as the tick, every tick that the position moves up or down is $5. So let me explain this to you. If you look at buying a stock, and that's the easiest way to understand a futures contract, if you are bullish, meaning you think the stock is going up, you hit the buy button. If you think the stock is going down and you're bearish, you would hit the sell button. Some will call it short, but you're trading the downside is basically what it is. If you think it's going up, you hit buy. If you think it's going down, you hit sell. And that's your opening transaction. The first thing you ever did in your account was to hit buy. You now have a position. You would sell to get out of it. So whatever you do to enter a trade, you'll do the exact opposite to exit the trade. Okay? When we look at how this position moves or works, it works just like a stock. If I think the future is going up, I hit buy. If I think it's going down, I hit sell. That's all there is to it. But when it comes to the contract size, each futures contract will have different point values or contract size to them. So 5 points, or $5 rather, is the smallest move the position can make. If the Dow goes up 1 point, you will make $5. If it goes down 2 points, it would cost you $10 in the trade, in the transaction. Now, the way that the tick works, T-I-C-K, tick, it's across the board for every single position has a tick. They're all different, or can be different, but it has a tick to it. So what happens is this. That tick size is defined. You don't get to choose it. You don't pick what it is. It is what it is. The smallest tick, the smallest move on a stock is a penny. That's the tick size, a penny on a stock. Well, the smallest move on the Dow is 1 whole point. So if the Dow went from 20,000 to 20,001, that's 1 tick move. 1 tick equals $5. If it moved 10 ticks or 10 points times $5, that would be a $50 move. Okay, make sense? So the tick is the smallest increment that position can move in. And it doesn't matter what the position is. It only matters that you understand that for Dow right now, $5 is the tick value. Now, the trading hours are listed in Central Times. I want to actually show this or discuss this a little bit differently. I will talk East Coast times. which is the standard market hours for me anyway, is looking at East Coast. So 9:30 to 4 Eastern is when the stock market is open. Same with options market, 9:30 to 4. Well, the way that the futures market opens, it's not Monday through Friday. Futures will open at 6 p.m. on Sunday. Yes, Sunday. You can trade these on Sundays. You can actually trade these 22 and 3/4 hours a day. A day. Right? So what happens is on Sunday, the market opens up 6 p.m. It trades all the way through until Monday, not at 4 o'clock. Right? It trades all the way through till 4:30 on Monday. And then there's a halt. My bad, not 30, 15. 4:15. So there is a trading halt. It's not a shutdown, it's a halt at 4:15. And it shuts down for 15 minutes. From 4:15 in the afternoon until 4:30 in the afternoon is when we have our, again, halt. That halt is just a period of the market settling in, adjusting prices, and then they open back up again at 4:30. And then they trade for another half an hour. And then at 4:30 until 5 p.m. Eastern, they shut the market down for 1 hour. So 4:15 to 4:30, it's shut down as a halt. And then 5 to 6 is the overnight session. That is when the market actually closes for that hour. So 1.25 hours a day is when the market is shut down completely. All right? Now, it does that on Monday. When it opens up at 6 p.m. again, you're already into Tuesday as far as the market is concerned. It does this all the way through to the end of the week. It gets to 5 p.m. on Friday, and the market shuts down and doesn't reopen again until Sunday. So 22 and 3/4 hours a day you can trade this market from Sunday night until Friday afternoon. Now, you may choose to only trade certain days or certain hours of the day. The really nice thing is if you have that lousy stinking JOB that prevents you from getting to the market and trading during the day, you can take advantage of trading the markets in the evening. The Asian and the Australian markets start to open around 8 p.m. Eastern. The European markets between 3 and 4 a.m. Eastern is when those markets start to open. Their pre-market news comes out as well. So you can trade other major markets by trading the U.S. positions, but trading on what's known as the Globex or globally, around the world. Now, there are 4 monthly contracts that are available. And those months are March, June, September, and December. In other words, unlike a stock where you just say Ford is Ford, right? The Ford stock is Ford, and that's what we're buying. Well, when we trade the futures, we have to choose which contract we trade. And we always trade the one that is closest. The ones that are further away are not going to have as much volume and will have larger spreads on the bid and ask. So the idea is to try to keep that as small as possible. And then it says last trading day of the month. Guys, basically, if we look at the options expiration day is the 3rd Friday of the month. Options for equities, for stock options, the 3rd Friday of the month. But remember, well, I say remember, if you trade options, that options expiration is at 4 p.m. when the market closes. With the futures, it actually is 9:30 a.m. when the market opens for stocks. That is when the futures contract expires. So if you had the March contract, the 3rd Friday of March at 9:30 a.m. is when expiration is. That's all. Just like the options are for equities. Very similar. Now we look at the S&P 500. Few differences here, but not too much. The ticker symbol is ES. So YM is the Dow, ES is the S&P 500. 1 point is the equivalent of $50. That's the contract size, $50. Well, the difference here is the tick is not 1 point. The S&P doesn't move from 2200 to 2201. It moves in 1/4 point increments. Okay? So 1/4 of a point, well, that means there are 4 of those in 1 point of the S&P. And if we know 1 point of the S&P is $50, and we see that right here where it says 50, if we know 1 point is $50, then each 1/4 point is $12.50 right here. And we're just going to look at the outright. We're not going to focus on anything from calendar spread because we're not talking about that right now, right? This is primarily used by myself and many traders as a directional trade, not choosing a calendar spread or those types of options type spread trades are not used as heavily in the futures markets. There are some, but primarily if you think it's going up, you hit buy. If you think it's going down, you hit sell. Everything else about this contract is exactly the same. The months, the third Friday of the month, the 4 cycles, the hours, exactly the same. And then we get into the NQ, which is the NASDAQ. So the NQ, the contract size is $20. So 1 point move is the equivalent of $20. Well, also, it doesn't move in 1 point increments. It moves like the S&P does, but the S&P was $12.50 per tick for 1/4 point. Here on the NQ, it's $5 per tick. So it's like, holy mackerel, Rob, all these different numbers. Right. And that's why we're only focused on these 3. The really cool thing is you can go back, you can screen capture these pages that I have made up for you here or supplied for you here. You could screen capture these pages and you can read them again and again and again. Now you will catch something here, right? Well, let's see. On the Dow, it is correct. It says 4 months. On the S&P 500, it says 5. And on the NASDAQ, it says 5. Now, I did not make this sheet up. I captured these from an exchange, from the Chicago Board of Trade, CBOT, and CME websites is where these came from. So the CBOT, Chicago Board of Trade, NASDAQ, and S&P, they have the wrong number there. It's not 5, that's actually 4 that we're looking at there. All right, so hopefully this helps. When we get into some of the next videos, you'll learn a little bit more of the depth of how we utilize these contracts, how we trade them, and so forth. Ladies and gentlemen, have a wonderful day, and I will see you at the next video. Take care, folks. Bye.